Welcome to the Economic Preparation and Collapse Channel 2025. Thank you for joining me on this brief Sunday edition. Please be sure to hit that subscribe button, the like button on the way in as we talk about the interpretation of the latest financial news that comes out every week. Thank you for your support, ladies and gentlemen. We're talking about everything melting up now as we continue this slow collapse of the U.S. economy, $30 trillion U.S. economy. Yahoo Finance is reporting that Bitcoin hits an all-time high above $125,000. We have everything melting up. Gold is at an all-time high above $3,900. Silver is at an all-time high since the 1970s and 80s. Real estate is at an all-time high. Food, gas, everything is melting up, just like Venezuela did. It's like a Venezuela 3.0. But Bitcoin, anyway, is trading up. And a lot of people are into not just Bitcoin, but a lot of other stable coins here. But Bitcoin is the world's largest cryptocurrency by market value, and so I always talk about that initially. U.S. dollar is falling on Friday, followed last Friday, posting multi-week losses against major currencies here as the government shutdown loomed and other key data such as jobs data has been missing from these reports. So stocks are trading at a record high, as you know, based on what? We got a rate cut in September. We're going to get another rate cut next week, the 17th or 16th of this month, somewhere around there. But is it really making a difference in everyday Americans' lives? I mean, mortgage rates are up, housing stocks are down, stocks are trading at record highs. Like I said, based on just, rich people, ultra rich 1% shuffling their money around. There is no basis for this. So we're looking at things really heating up here and for the last 3 months and 2 to 3 months of this year here, 2025. And like I said, it's concerning is that the jobs report data is going to show that we've been hemorrhaging jobs the last 3 or 4 months, only adding 20,000 jobs in this economy. So where's the extra revenue going to come from to pull us out of this recession that's going to happen next year? Government shutdown delays key monthly jobs report as a pivotal moment for the U.S. economy. Once again, NBC News is reporting this. So the Federal Reserve Bank has determined the next steps for interest rates without access to the Bureau of Labor Statistics September employment data. So they don't have that. And most people think that they're going to be cutting again. They did say 2 rate cuts are possible this year. They've already did 1 rate cut last month. Now we're waiting on the next rate cut. So this jobs report is not going to be coming out. We know that inflation is high. We know that unemployment is up to 4.3% as of the last data in August. Really, unemployment is really at 8 to 10%. Really, underemployment is at 20% to 30% in this economy, meaning people who are working more than 1 or 2 jobs just to make ends meet or living with multi-generational family members. A lot of Gen Z are doing that too. And so we have a lot of concerning things here with this economy. We're really in a recession now, heading toward a depression. And on top of that, the U.S. housing market, some prices are falling in places like California where people are getting out of that state and moving to other states that are more affordable. But other markets are still, the prices are still very high, double relative to what people paid for these houses. And that's very, very concerning on all of our parts of the market here as people realize that they're overpaid for something that, it's going to be a depreciating asset. So another thing that I want to mention too is that in those areas like electronics and those TVs are way cheaper. Gaming consoles, appliances, all that's going to be on sale in a deflationary depression. What's going to be important is that the housing and the food utilities are going to be going up so much that people are going to either start moving in together, families are going to move together, or downsizing to apartments or RVs or some kind of tiny house or alternate dwelling unit. You're going to see the rise in that. People buying these boxables or whatever you want to call it, tiny homes or ultimate dwelling units, and setting up in people's yards or renting out people's, people who have 2 acres or more of land. They're going to be renting out those spaces, to set up their kind of alternate dwelling unit or RV or whatever, because the housing market is not going down because the supply is short and the prices are not going down because the developers have to make money. And they can't make a big profit if, the mortgage rates are super high and people can't afford to buy houses on a 1 or 2 paychecks type of situation. So this is what's going to happen in the future. So prepare for that. If you have land, if you have land, water, oil, if you have gold and silver, cryptos, anything outside of the U.S. dollar, you're in much better shape than those who have all the things in paper, because paper dollars is going to become more and more debased, more and more worthless as we transition into this digital economy, meaning everything is going to be on your phone. Currencies are going to be coming up here. They're going to be obviously controlled. That's what we're heading toward. You and I know that that's what we're heading towards. And so the dollar is going to become less and less of an attractive option around the world and even within the states itself. So just keep that in mind. But in the meantime, if you're in stocks, continue to ride the wave. Like I said, make sure you're pulling some of those profits out if you are making profits and putting it into tangible assets that you need for survival. Just in case the system goes down or water goes or food goes or whatever goes down, you will have access to that money and it'll be more liquid. Liquidity is going to be the name of the game. So just keep that in mind. Take care. God bless. Enjoy your weekend and be sure to subscribe to this channel for the latest interpretation of financial news, as we're not financial planners or advisors here, but we are interpreting financial news as we see fit. Take care. God bless. See you soon.